Welcome everyone to Vested Interest. This is Shane, and before we get in the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thanks to those who subscribe to the channel. The channel continues to grow because of people like you. Heading to 1,000 subscribers, not quite to 700. Help me get there. Hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community, building a community of like-minded dividend growth investors to share our experiences. Portfolio updates like this I do every Sunday morning, usually around 7:30 a.m. We did add $1,304 to the portfolio in new capital. We also do options in the portfolio, so you'll see those and any buys or sells for the week. So again, hit that subscribe button and join us here if you are into dividend growth investing, dividend growth stocks. I do a stock pick of the day series Monday through Thursday where I look at a stock that's pulled back on the day to see if there is any potential value there, whether it's a green day or a red day, always trying to find value in the market. Well, let's jump into the update this week and look and see what we added with this $1,304 and see if we were paid any dividends as well. Here we go. So we did have one options play on September 5th. We sold to open a covered call, three options here, three contracts at a $29.50 strike price with a date of September 8th, right? It did not hit the $29.50, so we kept those Bank of America shares, ticker BAC. That is what BAC is. That's Bank of America out of the financial sector. So we received $22.39 in options premium for running those three options contracts. So cash added $22.39 on that option play. We actually did try to do some NextEra Energy plays, but no one bit on those. And I think I maybe did one other one, but I can't recall off the top of my head. But this is the only one that anyone bid on, and I was surprised at that, to be honest with you. So not a ton added, but if you were to add this up and do this every week, this would be a little over $1,000 a year in extra capital into the portfolio. Now for the dividends paid out for the week, it was a great week, $404.36. Very, very nice week overall. We received options on September 5th, September 6th, and September 7th. And I broke this out a little bit so we can look at this. Enbridge Inc. paid us $98.08, but because Enbridge is out of the energy sector, because Enbridge is a Canadian company, they take the taxes, or at least my brokerage does. I invest through Ally Financial, my bank that I do my regular banking and has my daughter's custodial accounts, our savings, our banking, as well as our portfolio is in Ally. So they take the taxes out right away, and this is the Canadian taxes because this is a Canadian company. So they take $14.71 out of this $98.08. And then the rest is automatically reinvested into Enbridge, and the rest of the funds picked up 2.34788 shares of additional Enbridge shares. So I have the drip set, so every time that a company pays out dividends, it will go back in. But I wanted to show not only that the dividends were paid out, but show you how the taxes are taken out. And if you do have foreign companies, that you'll have to look at what your brokerage does. Either they'll take it out automatically for you, or you will have to do it at tax time. Ally just happens to be one that does it for me. So that is what you're seeing here, and why it wouldn't, if you did the math out, it wouldn't be quite $98.08 reinvested. It's the 98 minus the taxes. But let's keep going here. We don't want to dwell on that too much. We also received dividends from Pfizer, ticker PFE. This is out of the healthcare sector, and we received $73.96. And that $73.96 went right back in and bought 2.05393 more shares of Pfizer. We also received dividends from LyondellBasell, ticker LYB. This is out of the materials sector, and $141.09 total in dividends. Went right back in and picked up 1.41866 more shares of LyondellBasell. Really nice position here. Very nice dividend payout on this one as well. And last year they did a special dividend, which was I think it was like $3 or $4 per share. Very, very high special dividend on this one last year. And I'm hoping that so that's the highest month from last year as well. I'm hoping that this quarter or this month is going to be higher than it was last year with that special dividend, but we will see. And last up on the 7th, we picked up Johnson & Johnson paid out $105.94 in dividends, and with that $105.94, we picked up 0.66065 more shares of J&J. J&J is out of the healthcare sector. All total, these new shares that were picked up by the dividends, and that is that snowball effect, right? Positions in the portfolio pay out dividends. Those dividends buy more shares. Those shares add additional passive income. And all total, these new shares added $20.57 in additional passive income over the next year. And the first investment of the week, September 7th, we added $985.43 of that 1304 that we saw on the front page. And with that $985.49, we picked up 8 more shares of Enbridge, ticker EMB. We picked up those shares at $33.34 per share. We picked up 12 more shares of MPW, Medical Properties Trust, is a REIT out of the healthcare sector. Enbridge is an energy company here. And we picked up those MPW shares at $6.78 per share. We added to our Realty Income position. This position has really pulled back here. Realty Income, ticker O, another REIT. Like to see this one under 60, and it is really cheap right now at $55.11. So I am taking advantage of this dip and decreasing my cost basis on this one. I'll probably add a couple shares every week as long as it stays under $60 per share. I put a big tranche here, was it last week or the week before? I picked up 10 shares and it was like $57 or $58 per share. So again, it keeps on dipping and I keep on adding it to my position. I really would like to probably add another shot of 10 shares there, but I've got some other ones I'm trying to build out as well. A lot of companies pulled back right now, but this is one again, 2 shares at $55.11 here. Added 4 more shares to our CVS position, ticker CVS. This is out of the healthcare sector. Picked up those shares at $65.48 shares. And continuing to add to our NextEra Energy position, ticker NEE. This is a utility company here. We picked up 4 more shares at $66.34. And these new shares and new capital invested, $985.49 invested, picking up these shares added an additional $51.54 in passive income over the next year. And we weren't done. We added another $319.11. And with that $319, we picked up 2 shares of J&J, Johnson & Johnson, out of the healthcare sector. We picked up those shares at $159.55. This is another one. My cost basis is around 162. Anytime it dips under 160, I like to add this to my portfolio here. I think it might have even hit 158, but when we jumped in, it was 159.55. So we added 2 more shares, and those 2 shares added another $9.52. So with the dividends paid out, and the new shares that those dividends paid, with the invested capital that we added, the $1,304.60 in new capital, all total, we added $81.63 in passive income. Very nice to see. So not only are we receiving passive income for the additional capital we put in every week, but we're really starting to see a big chunk added by the dividends paid out every week or every other week. We don't get dividends every week, but pretty much every other week we're getting something paid into the portfolio. So that is the snowball effect in play. Not only the capital that you add, but the capital that is created by the portfolio continuing to be reinvested into the portfolio builds that snowball bigger and bigger and bigger. That is what the dividend snowball effect is all about. Now let's run through a quick portfolio update, look at the sector weights here. And communications is sitting at 8.51% of the portfolio. Consumer discretionary, 0.18. This is that Williams & Sonoma position. We only have 2 shares there. Really would love this one to fall back into 125 or under territory. It has really shot up into the 140, 130, 140 consistently over the last couple weeks. So we've backed off from adding it. So it's just this little sliver right here. Consumer staples sitting at 5.3% of the portfolio. I'm looking at a couple consumer staples to maybe add into the portfolio. Kroger's is one company. General Mills is another one. We used to have General Mills a couple years back. We sold it after it ran up. I think I was buying it in the high 40s. It ran up into the 60s or 70s. I think it actually ran up into the 80s, but I believe I sold it in either the high 60s or low 70s. I'd have to go back and look. But looking to add General Mills and possibly Kroger back into the portfolio. They are starting to look attractive. Haven't pulled the trigger yet, but Those are two I'd like to plug back in. Energy sitting at 6.64%. The Enbridge position we've been adding to, I'd like Enterprise Product Partners to pull back a little bit, but it continues to be up. But I have been adding to this in the form of the Enbridge additions. Financial sitting at 10.29%. Healthcare is the largest chunk of the pie here at 18.19%. Industrial sitting at 8.26%. If Union Pacific stays under 211 next week, I'll add probably 4, maybe 2 or 4 shares to my Union Pacific position. So this should jump up here maybe next week. Technology sitting at 8.63%. Materials is, still in second place at 14.69%. Utilities sitting at 6.23%. And REITs and real estate make up 13.07% of the portfolio. No ETFs. I consider my overall portfolio my personal ETF. So the whole thing, you could call it the vested interest ETF. That's fine by me. Now, every week I show you my portfolio in full transparency. So whether I'm up or down, the positions in my portfolio in this column, how many total shares I own, the current price as of the close of business on Friday, current market value, what the market value is, again, as of the close of business on Friday, average share price, this is my cost per share, my purchase price, how much I have in each position right here, whether I'm up or down. If I'm in the red, I am down. Percent return, same thing. Green is, you're in the money. In red, I'm down on the position. What sector each company falls in, whether it's a quarterly, monthly, semi-annual payer, current dividend yield as of the close of business on Friday, my yield on cost, the portfolio weighting. So on the previous slide, we saw the sector weightings. Now we get to see each individual weighting in the portfolio. Estimated annual income right here in this column, which months it pays out, the most recent dividend growth over the last year, and where it sits, 15% of its 52-week low. If you watch my stock pick of the day videos, you'll understand I'm looking at companies not only below my cost basis to invest in, but also even if it's not under my cost basis. Like for example, let's use Union Pacific, UMP right here. Excuse me. I would like to add to this position. Currently, it sits at $211.87. That is not under my cost basis, right? My cost basis is $195.19. But if you look here at $211.87 and you go over to this column and you see 15% of its 52-week low is 15% of its 52-week low is $211.24. So if this dips, let's say next week it's under this $211.24, $210, $209, we'll say, I will add to this position. I'll look to add 2 to 4 shares to this Union Pacific position, even though $209 or $210 would be over my $195 cost basis, it is still under where it sits at 15% of its 52-week low. So that's what this column is for. I also use it when I'm looking to add a position like Kroger, for example. I'll look at where Kroger was at 15% of its 52-week low, and I look to enter a position at 15% of its 52-week low or below that number. So that is what this column is for. So let's quick run through here. Overall positions here, I do have 4,845.464 shares. The market value currently sits at $165,165.78. I am down, right? I have $170,896.87. So I am down $5,731.09 total, down 3.35% on the portfolio. I am in the red. Current yield sitting at 4.692%. My yield on cost 4.535. But this is what it's all about. Even though I am down over here, I do not really care. I am focused on this number right here, whether the market is up, whether the market is down, whether the market is floating sideways. This continues to go up week after week, quarter after quarter, year after year. The passive income provided by the positions in the portfolio, these are all the dividends here that will be paid out over the next year. Passive income, very nice to see, $7,749.98. Right? I'm looking forward. I don't think I'm going to make it by the end of the year, but I think by Q1 of next year, we will eclipse the $10,000 a year in passive income. And I'm really, really looking forward to beating that goal. And then next, the dividend growth is sitting at least over the last year, 8.22%. So for example, Verizon recently increased its dividend and it was right around this 1.97% dividend growth. So over the next year, if I didn't add anything else, these dividends would grow on average of 8.22%, right? Obviously, I'm going to continue to add capital, so it will be much higher than that. But that is what it would be impacted if I didn't add anything new. Well, that is it for this one. This is actually the moon, believe it or not. I think it was a blue moon they called it here. We had a couple nights back. This is the moon coming up about, I think it was about 7:45, maybe 8 o'clock, a little after. There over the water at the house. That is not the sunrise. That is the moonrise. Pretty cool to see the other night. You can actually see some of the boats out there with their lights on as it turned tonight. Thought I would share that. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences. I share my portfolio updates like this every month. We cannot, benefit from each other's investing, but we can benefit from each other's experiences. So drop some tips and tricks down below if you're an options trader. I actually learned about options by watching other YouTubers. Are there YouTubers out there that you watch besides this channel? Would love to know. Drop them down in the comment section below. And let me know what dividends you were paid out this week. Do we own any of the same companies? Were we paid out any of the same dividends? And do you do options? Let me know that as well. What plays are you running? How are you doing on your options? Do you buy options or do you just sell them? On this channel, I really only sell covered call and cash secured puts, but I know some people like to buy options as well. I have not journeyed into that myself. Well, that is it, and we'll wrap this one up. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. Accounting money should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.